Hey guys, it's Ben with Merriam Men Trading. Hope you all are doing really well today. Today's video, I want to kind of talk through different investing strategies. We talked about this in the intro, and I want to, if maybe you're brand new to trading, I think this will be a good video. If you're experienced in investing, this is probably mostly old hat for you, information you already know. But really, what I want to talk about is kind of 5 different trading strategies that you could use to invest and invest successfully. I remember when I started investing, I didn't know any of this stuff. And looking back, it probably would have been good for me to have learned this. So follow along. We're going to kind of walk through. Again, if you're new to our channel, make sure you like and subscribe. Like the video, subscribe to the channel. We're going to be putting out other content like this in the next few days. I'm going to share my screen with you. I've kind of created a little bit of a chart of kind of 5 different ways you can get involved in investing. There's retirement investing, mostly getting involved in mutual funds, things like that. There's long-term or dividend investing, where you're getting in stocks, but you intend to hold it long-term. There's ETF investing. We'll talk about exchange-traded funds and what they are. We'll talk about swing trading. So this is a stock trading strategy that you can use to buy and sell stocks in a short to long term basis, kind of there in the middle. And then there's day trading, which is just simply buying a stock at the beginning of a day and selling it at the end or somewhere in the middle. So we're going to talk through all of the advantages and disadvantages of these strategies. So with retirement investing, this is how I got started. I opened an IRA 10 years ago, and I got involved and bought some money in some mutual funds. You can see it sitting there right now. And haven't had a lot of time or money in the last few years to put in, but this is where I started. And so I've got a small portion of my portfolio invested in this. Now, here are the advantages to this. You will win. Like if you just put all your money in there, like right now, I've made 15% total on that investment, and that's great. However, like part of the disadvantage to that is it's a retirement fund. It's an IRA, which means you can't pull it out for years. And so by and large, you'll see this, you'll continue to succeed at 10, 15% along those lines. However, that same money could have been used in other different investments, and you could have made more money sooner using different strategies. This is a really conservative strategy. As a matter of fact, a lot of people even suggest putting part of your portfolio there, but not all of your portfolio. I know if you maybe listen to Dave Ramsey or some of those guys, when it comes to investing, they say put all of your retirement income towards mutual funds and don't worry about anything else. I would agree to disagree with that. There's nothing wrong with doing it. It's a conservative strategy, and you're going to make money long term. The issue with that is, and I saw this past year, is I had been putting all this money in this mutual fund. Then we had the stock market kind of collapse at the beginning of the pandemic in 2020, and literally I lost all of my gains. And so now I've recouped some of those losses, and that's great. However, I could have, I lost everything I had originally gained. So you can't collect for years. Your success is based on a whole market. So again, you can lose if the whole market loses, but you will win because by and large, usually the whole market wins. So that's basically a little bit of retirement investing. Then there's long-term or dividend investing. And so I don't really practice this strategy. Warren Buffett has practiced it and made millions off of it. I've got a friend of mine who this is all he does. He works at Starbucks when he's not away on deployment in the military. And this is all he does is just buy investments in Starbucks. And so there's some beauty to this strategy. One is that you own part of the company. I mean, like the more shares you own, the more you are a owner of the company, because that's basically what the stock is. It's part ownership of the company. And the longer you hold that stock, the more dedicated you are to that company. So you actually own part of the company. And as a result, you get paid usually a quarterly dividend. And so I'm here, I'm on tradingview.com. If this is, again, if you're new to investing, you'll want to familiarize yourself with TradingView. TradingView is a free website. You're more than welcome to use it. You can create an account for absolutely free, and you can still do a lot of stuff on there. They have a paid service, but I currently don't do that. I just use the paid account. I'm on their paid account right now. Here's Starbucks, or SBUX is their ticker symbol. If you invested in Starbucks and say you own 100 shares, okay, so then part of what you'll see is, according to them, right now they have earnings coming up January 26th, and their forward dividend and their yield is 1.73%. So if we go back to the chart, their dividend, if you owned 100 shares on back in May, you would have been given $41. So at that point, your investment would have been around, say you bought 100 shares of their stock. That's around $76 a share. And then come May 7th, boom, they give you 41 bucks. That's a really cool thing, isn't it? And so the longer you hold, every 3 months, boom, $41. November, $45. And so you had originally invested this much, and now they're paying you quarterly for owning shares of their stock. So that's the beauty of dividend investing. And if you're interested in that, we'd be happy to send more information to you. But there's also some disadvantages to this strategy. There's usually less growth in the shares compared to companies who does not pay out a dividend. Now, you've seen with Starbucks, they were at $76. They dropped as far as $56 at the height of the pandemic lockdown and the market collapse there. And now they've rallied. They're at $103 a share. So if you would have gotten in back there, you're winning. But I mean, by and large, Starbucks isn't usually that volatile. You know, I mean, here they were before the collapse, and they were at $97, $96. So they've really only gone up $6 a share since July of 2019. And this is what we're talking about. So like, if you're getting in and you're trying to make a lot on your return, then maybe this isn't the best strategy for you. Now, sure, you're going to be getting $41 or whatever a quarter. That's $160 a year if you owned 100 shares. But long run, you're not going to be making a ton on an annual basis. So that's long-term or dividend investing. There's nothing wrong with that strategy. I actually own dividend stock in Keurig Dr. Pepper because I love both of those products. And I wanted to put something into a dividend stock. So that's what I chose. So then the next strategy is just like ETF investing. I have another friend of mine who is big on ETFs, and ETFs are really cool. I think they offer a lot of potential. So one of those things is you can put your hands in many pots. So the beautiful things about an ETF is, as opposed to just owning an individual stock, an ETF usually invests in multiple different stocks in the same type of sector. So let's say that I'm into, technology. So instead of just investing in Apple, I may buy an ETF and it invests in Apple, Microsoft, all these different technology companies. And so I've got my hands in many of those different pots. And there's potential for solid growth in ETFs. This past year, we've seen a lot of growth in the ETF market. But some of the cons is compared to swing trading or momentum trading stocks with ETFs, it usually takes more time. Now, this is a good middle range option between dividend investing and swing trading. So here's an ETF that I'm invested in currently. ARK is an innovation ETF. And I mean, they've had explosive growth this year. Here's where they were at the start of the pandemic, $59 a share. They went down as far as $34 a share. Right now, they're at $145 a share. And so you can see this. There is a ton of potential for growth in the ETF market, not to the extent, though, of just owning individual stocks. So it does usually tend to take more time to grow. We're in a really unique time. Some people may even think that we're in a bit of a bubble, and maybe we are. Um, but there's a lot of potential for ETF growth. And along with that, it's usually quite safe to invest in ETFs. I've got another friend of mine who's invested in iTote, which is just basically like NASDAQ, S&P, Dow Jones, all combined. And so he just bought in this, opened at the pandemic 76, dropped down to 50. Right now it's at 88. So again, with ETFs, you don't usually see a ton of growth, even though you will still see some growth in the ETF market. So it's a really good strategy, and it's a pretty conservative strategy to make money. Now, swing trading, and this is my baby. Okay, this is my bread and butter. I love being involved in swing trading. With swing trading, it takes a little bit of a middle of the road approach between short-term investing and long-term investing. You're not a day trader, meaning that you're just trying to make quick cash off of them, but you are looking to make a good amount off of your investment in a short amount of time. So that's part of the pros of it, is you find the stocks that are growing, and you get in on them, trying to get in as they're moving up, and you can make a lot of money over a short amount of time, days, weeks, months, etc. But then there's some cons to it, just like there's cons with everything. You can be in for a really volatile ride. So for me, for instance, one of the investments I got in this year was Peloton. I got in, where was that? I got in this past summer, probably July or August. It was, yeah, right about here, around $70 a share. And I got to watch it go from $70 a share all the way up to 140. I was trying to get it to 160 before I cashed out. And then we saw this massive volatility, and it dropped going into the election the past year. The market kind of went down some. So from $140 a share, it went down to less than $100 a share. So I had 100 shares in the stock at the time. So I had lost $4,000 of what I had originally gained at that point, which is it's a lot of money. I stayed in, and it's paid off since then, and now they're doing really well. But that's what I'm talking about with swing trading momentum stocks. You can be in for a really volatile ride. You will also lose some of the time. With swing trading, you're not going to, every single investment you get into, unlike dividend investing, where you're mostly just investing to hold it, or ETF investing that's just kind of a slow churn growth, or even mutual funds where you're going to win. With swing trading, you're going to lose sometimes. And so it's learning how to lose successfully, and hopefully your wins will outweigh your losses. And usually they do. With Peloton, I doubled my money. I sold half my position. I'm still in on Peloton. And so they can still grow, and I can still make money. But I've also cashed out a little bit as well. Another one that I did this past year, MicroStrategy, has been a really solid investment for me. I started back in the summer. It's like $168 a share. It's at $565 a share right now. So just amazing growth. These, by the way, are not suggestions of what you should be invested in. You need to consult real professionals about before you make any decisions. But these are just only some of my best wins this past year. MicroStrategy was another. So this is the beauty of swing trading, is a lot of money can be made over a short amount of time. You're not a long-term holder. So unlike the guys that maybe are invested in dividend, you're not usually going to be paid a dividend because you don't plan to be in the stock long-term. And then there's probably the fastest, or I kind of feel like it's maybe the craziest strategy out there, and it's day trading. And if you're experienced at day trading, I think a lot of money can be made. I also think a lot of people lose money by getting involved in day trading. Now, there's some pros to day trading. I can't lie. One of those pros is that you can get out at the end of the day, so you're not subject to overnight drops. Okay, so we go back to say we go back to MicroStrategy here. At the end of the day, on January 14th, it ended at $630 a share. Well, the next morning, if you woke up, the stock opened at 607, so it dropped how much money there? $27 a share, and then it went down as far as $577. With day trading, you would have probably gotten in here and gotten out, and so you probably wouldn't have even messed or worried about what happened to MicroStrategies on January 15th. Along with that, it can be easier to win some of the time because you're following where other people are investing. And so if you can figure out where the volume is at on certain days of the week, this can be a real way to win for you. But there's also some cons. With day trader laws now in effect, if you're not aware of this, if you trade or buy and sell more than like 3 days out of 5, like where you buy a stock and you sell a stock the same day, you will get flagged as a day trader. And at that point, there's penalties for that in your account. And you may even have to, your money may even be held for a certain amount of time, all these different things. So you have to be aware of that, especially in accounts. I think it's only for accounts that are less than $10,000. If it's over 10, you can do what you want, but less than $10,000, you will get flagged as a day trader and your money can get held. The same way you can easily win, you can easily lose, and quickly, because in day trading, it's not just about making money, over the day, but it's making money over the minute. And so if you go and say something like Tesla, and so you look at this, and this is a daily chart just of today, you go look at this and say you buy right here at the top of 1003. Well, now look what happens. It drops all the way down to $843 a share. So $50 a share you could have lost just today if you don't know what you're doing. So you've got to be really careful. You've got to try to study the charts and learn to read these things, I would say, before you get involved in day trading. And then it takes lots of time and practice to hone this strategy. Like I said, with day trading, you're not just watching the chart for a day. You're watching the chart minute by minute because of the volatility of some of the stocks that you'd be investing in. And so these are some of the ways that you can get involved in investing in the stock market. And look, there's no right or wrong way to invest. It's about what you're most comfortable with. I would say that ultimately the best way to start is probably to try to open a paper trading account. Almost everybody out there will allow you to open a paper trading account for free. Your bank will probably allow you to do it. I trade with E-Trade. E-Trade allows me to do a paper trade account. And that way, it's not that you're trading with real money, but it's play money. So you can, if you want to get into day trading, you can practice with a paper trading account or options or whatever else is out there. There's a lot of different ways for you to get involved in investing. So we showed you 5 different strategies today. I hope that this video was helpful and informative. So please feel free to share it with friends, like the video, make sure you subscribe to our channel. We're going to be putting other content out like this in the days to come. God bless. Have an amazing day. We'll see you soon.